right, welcome back to another Scott's Quick Cash class, and I'm really excited about this one. I don't know if I can get it done in 5 minutes or not, but we're going to talk about credit. Um, Credit is one of those things that, it's kind of a necessary evil. A lot of people are scared of credit. A lot of people use credit wrong. I just kind of want to go over some basics of credit, some mistakes I've made in my past, and then hopefully maybe some advice that can help you out. But your credit score, essentially, when you turn 18, anything you want to go buy, whether it's expensive, not expensive, house, car, you're going to need a credit score. You got to start working on that well before you even get to 18. But once you hit 18 and then you're into your 20s, you got college, a lot of times that bad credit score or those decisions you make can affect 10 years down the road, right? So it's really important. Now, there's 5 things that make up your credit score, that is. One is payment history, and that's the biggest one. If you don't make your payments on time, it's going to whack your credit score. It can be up to 50 points if you miss one payment, so you definitely don't want to miss a payment. But that's 35% weight. Think of it kind of as a pie, right? So that's 35% of the pie, which is a big slice of pie if you miss a payment. The second one is credit utilization. Now, that's a really big word for meaning how much money are you using that we say you can use. So if you have $10,000 on a credit card that you can use, how much are you using of that? Are you using $1,000 of it, $2,000, $3,000? The ideal number is to keep it under 10%. So if you have a $10,000 limit, don't put more than $1,000 on it, or it'll actually start to hurt your credit score. Obviously, there's sometimes you're going to have to do that, but ideally not to. But that credit utilization is another big number. It's 30% of that pie. So between paying on time and how much credit you use is 65% of your pie. That's really driving the train right there. Length of credit history, obviously, I'm talking to you younger folks, younger than me at least, but length of credit history, right? So, you might have heard people say, hey, once you get a credit card paid off, close it so you don't use it again. It could be good advice. If you're trying to build credit, it's not the greatest advice because you want credit history. The banks want to see how well you pay back credit and how long you've had credit. So you definitely want to, if you're trying to build credit, you definitely want to keep that open. That's worth 15% of that pie. So we're up to 80% of the pie through those 3 things. The fourth thing is the credit mix. And what that essentially means is, do you have credit cards on there? They call that revolving credit because the balance is always changing. And then your payment on that is always changing. So it's not the same payment all the time. So they call that revolving credit. And then your installment loans, like a house payment, it's the same every month. Your car loan, student loans, those could fall into installment payments. Well, that's made up of 10%. So a small portion, but it does make a difference to have a few different accounts on there for that. The next is new credit. That's 10% of the pie too, so that completes that. But essentially what it means is if you go out and you try to get a credit card this month, and then next month you go apply for another couple, and then the month after that you go apply for a few more. What that does, every time you're running your credit and you're getting a credit card, it basically looks like you're going out and buying a lot of stuff, right? And so banks will put the brakes on that. So you have to do that selectively, all right? Now, the thing with credit is it's a tool that you have to use. I've used it well. I've also used it not well. I do remember, in my earlier days, running up huge credit card bills, hey, I'll pay for that later. But you definitely want to make sure that you're using credit smart. And when we talk about missed payments, if you're late to the cable company, they're not going to report you to the credit bureau. If you're late on your car payment, they're definitely going to. So if you have to make decisions on what bill to pay and what not bill to pay, you definitely want to pay bills that show up on your credit report before the ones that don't show up on your credit report. All right, so question of the day. Do you know what your current credit score is, and are you helping or hurting it? Very simple. There's a lot of different options out there. Credit Karma, Credit It. There's a few different ones out there. Capital One has their own, but definitely get on there and figure out what your credit is, because if you don't know that number, how are you going to get better at it? And then tip of the day, pay on time. I can't stress this enough. Pay on time, pay on time, pay on time. If you miss one payment, it takes years to make up for that, and you definitely don't want to do that. I had not good credit, and for at least 5 or 6 years, I couldn't get financed till I actually got serious about making my credit better, and then I could actually go out and get a loan. I couldn't get a credit card, I couldn't get a car loan, I couldn't get a house loan, and now I'm an 800 credit score. So when I started the process, I wasn't. So that's my tip of the day. Pay all the bills all the time. Pay them on time. Need a question of the day? So send in your comments with a question so I can answer that. Till next time.